Record highs for stocks are only 6% away. Junk debt burst to 52-week highs last week. Gold pushed higher as dollar drops. Dr.Copper delivered good news, and Ripple case has helped cryptos. We will also do a trade example at the very end for Coinbase Incorporated. All this and more news in this editions of MasterChartsTrading.com market recap for Saturday, July 15th, 2023. As always, please don't forget to like, share, and comment on this video. This is Alexander. As always, please don't forget to do those 3 actions. It will help me tremendously in promoting this video. Looking at S&P 500, as always, I'm using my proprietary MasterChartsTrading.com price action indicators. You can find more information in the description on how to sign up. On this chart, we're looking at S&P 500. This is a TradingView.com interface. TradingView.com is a free interface. You can simply sign up on their website. Once you sign up on my website, MasterCharts Trading, and you will be able to access these indicators once you sign up. So looking at this chart, this is a daily chart, meaning that each candlestick is a 1 day's worth of activity. I wanted to look first at weekly chart, meaning each candlestick is a week's worth of activity. So this is relatively zoomed out, like this is going back to 2021. Looking at this particular chart, notice that we are at new 52-week highs. Previous recent alert, this is a breakout into a new bull market, occurred here in April of this year, 2023, using my indicators. You can see that's just simply when the stock price closes above this blue line. And this is really all we need to know. We don't really need to know anything else. Once the stock closes above this blue line, we will say that, okay, we're now in a new uptrend. And we're pretty much continuing higher non-stop. And this week, we are at new 52-week highs. There is some resistance that can be, that could manifest itself. And this is from the highs that occurred back in March of 2022. I'm hovering over them right now. These highs are about 2.5% away, 2.7% away. So these are March 2022 highs at 4,637 points for S&P 500. We're currently at 4,500 points, so about 2.5% away. Record highs or all-time highs are just 6.5% away. The record highs were set right before the Russian invasion of Ukraine in January of 2022. And now we are again approaching those record highs. So when or if we break to those record highs, it will be extremely bullish, I think. And a move higher could be quite significant, really. We are not there yet, obviously, but I think it's now more and more likely that we will get there relatively soon. So let's look at high yield bonds or junk debt. So let's look at the weekly chart also. High yield bonds. This is ticker symbol JNK. Notice that on the right hand side here where I'm hovering, it says ADJ. It means it's adjusted for dividends. JNK and high yield bonds are by definition high yield. So the price of the bond itself does move, but not that much, and most of the return from this type of securities comes from the dividends, or in this case coupon. So we can uncheck that where it says ADJ and notice that the curve will be completely different. This is without the dividends. If we add the dividends into the equation, then we will see that the price actually just hit 52-week highs. This is this week of Monday, July 10th, ending on July 14th, and this is a new 52-week high. more importantly, we burst above this previous high from February of this year. Let me look at it from the daily perspective. So there it is, the February 2nd high. And since then, we haven't been able to kind of get above it. Now, finally, we're doing it. And this is very good news, I think. So maybe this is like a cup and handle. I'm going to draw it in. Possible kind of flat consolidation. Now we have this cup. So now that we're bursting above this level from February 2nd, this is obviously going to be quite good. And I think this this pattern, the depth of this pattern, which began on February 2nd, pulled back towards March lows, is about 5.7%. So if we are going to move higher, we will most likely duplicate this move to the upside. So 5.7% will put us pretty close to all-time highs for junk debt. So for example, from today's levels, we can say, okay, so 5.7, we're going to look at weekly chart. So 5.7% from today's levels is going to be quite close to records. And as I said, I forgot to mention that high yield bonds are highly correlated. Down here we have a correlation coefficient. So if the correlation is in the positive territory, that means that high yield bonds and stocks are moving together in lockstep. So right now the correlation is very high, 84% of the time. High yield bonds and stocks are doing the same thing. So a move of 5% for high yield bonds, from the February, maybe early February, or let's say from December lows, we can see that the same movement for stocks from February, or rather from December lows, correlated to about 20%. So a 5% move for high yield bonds translates to about 20% move for stocks. So as I said, if we move from today's levels about 5%, which is very likely for high yield bonds, then from today's levels, stocks are likely to move 20%. All right. So a 20% move from today's prices will be somewhere here around 5,500. So yeah, very reasonable, especially once we break out to new records. This is a very reasonable kind of move. So let's stay tuned for that. I think this week's action really made a huge improvement in the technical picture because of the way high yield bonds have acted, and we're finally breaking to 52-week highs for the high yield bonds. Dollar, on the other hand, had quite a terrible week. In fact, dollar made 52-week lows. These are 52-week lows. More importantly, it broke below this February lows. So I'm going to look at the same chart on weekly chart again, because it just shows a more broader picture. And here it is, the dollar index. I have already shown this chart in the past, and so notice this pattern that I'm tracing out that started in late January of 2023, a high here in mid-March, and then another low here in mid-April, another attempt to go higher into late May, and finally now we see this breakdown. So notice this white line, which signified the lows of February and April lows, and we have conclusively broken those lows. And so the depth of this pattern is around 4.5 to 5%. So again, it's reasonable that the same pattern will be duplicated to the downside. So we're looking for dollar to be moving, about 5 points lower, 4.9% for about 5% lower. So this would put us somewhere around December 2021 lows. By extension, gold should move higher. Why? This is gold XAU divided by USD. So lower part of this equation just got weaker and will most likely continue to weaken. That means the top part of this equation, gold XAU, will move higher. So I'm looking at gold, and notice where it bottomed. It bottomed exactly at the blue support resistance line right there on 29th of June, and then it rallied. So we're long gold miners. I'm personally long gold miners. I'm also long some of the individual gold shares and gold miners ETF GDX. I'm long myself. Notice that again we bottomed exactly at this blue line. Notice this blue dotted line. I put it in back in like April, and I was pretty certain that we're going to pull back towards it. We did exactly that. I also thought that we're going to continue lower, but the dollar actually weakened. I thought that, see, the dollar was strengthening, and I thought maybe this is going to continue higher. However, dollar I mean, it was already in a downtrend. Notice this downward facing arrows as early as January of this year. And now the dollar's downtrend has definitely reaffirmed itself. We made a new lower low, and additionally, this is a 52-week low. So once again, this is quite bad news for the dollar, and I think excellent news for gold miners, silver, platinum, etc. So looking at this very zoomed out chart of gold, I have already shown this chart again in the past, but I will just quickly reiterate. Notice this kind of cup and handle pattern that I'm just tracing out for you. So once we break to new records, we have to get above the August 2020 highs. The depth of this pattern, I'm going to show you the depth of this pattern, somewhere around 20%, so I don't know, about 400 points or so. If we break to new records, then most likely a move towards the $2,500 per ounce for gold will unfold, which is about 20% or more higher than previous highs. So we're looking at, if I'm correct and dollar will continue lower, or at least not strengthen that much, most likely then we will see a significant appreciation for gold. We are long gold again at MasterChartsTrading.com. We're long gold miners and individual gold shares. Gold equity is looking quite attractive right now. Dr. Copper. So Dr. Copper is called Dr. Copper. The Copper futures is called Dr. Copper for there is a belief on Wall Street and in general between traders that copper is a predictor of expansive economic activity. So potentially we have reached the bottom for copper. Notice this a long unfolding pattern. So copper was definitely in a downtrend when it hit a multi-year low, at least 52-week lows here in July, and started rising in this zigzag fashion. So notice again on this chart, my indicators, they provide excellent support resistance levels. So for example, right there on 18th of January, the price came up to this blue line but was rejected. So at this point we did not yet consider copper to be in an uptrend and kind of traded sideways. Again, right there on 14th of April, we touched this blue support resistance line. Notice the indicators also curved down, and the price action followed that, also down. Okay, so and then it continued lower, and then finally, where I'm hovering, actually right there, copper broke out on June 15th. Why do I think it broke out? Because it closed above the blue support resistance line. This signifies an uptrend per my system. day before yesterday we had a confirmation. Today also, or rather on Friday, the July 14th, also a close above this blue line. So right now I think copper has bottomed, and by extension, if Dr. Copper, the concept of Dr. Copper is correct, most likely we are not going to see any kind of recessionary pressures, at least in the near future. Of course, anything is possible. And looking now at Bitcoin, so news on 13th of July, where I'm hovering, Ripple ruling deals a blow to SEC's effort to regulate cryptos. This is Wall Street Journal. So I need to read it more carefully, but the gist of the matter is Ripple used to be considered a cryptocurrency. Then at a certain point, Securities and Exchange Commission came in and said that it's actually a unregulated security. And then right now they're back to thinking that Ripple is a cryptocurrency. So this ruling is favorable to crypto industry and cryptos in general, and there's the move higher on the 13th of July. Now Bitcoin, I mean, you can be buying it here. I think the upside for Bitcoin is quite large. However, notice on this chart again up arrows, and this is where we cross above this blue support resistance line, and this is where we usually buy. Now, up until relatively recently, just like in November of last year, Bitcoin has been an extremely terrible downtrend. In fact, we were shorting cryptos. Notice those downward facing arrows. The latest one was a tremendous opportunity from 47,000 towards about 17,000. And again, notice how easy it is to look at these lines and find your entry points. Something happened back in February of this year, and cryptos started breaking out. Bitcoin broke out where I'm hovering on 15th of February, and since then we are thinking that Bitcoin is an uptrend, and we are buying different cryptos. In fact, I have a position in Ethereum. There it is. I'm just gonna show it to you briefly. Recently I bought it again right there on the June 20th. Why did I buy? Because the security closed above my blue support resistance line, and now we're moving higher. So again, there's the July 13th surge. So this Securities and Exchange Commission ruling, or rather ruling against SEC, is helping cryptocurrencies of all sorts. And also there is equity that can be traded that is tied to cryptocurrencies, and this is Coinbase. So first of all, I wanted to show this pattern that I really like trading. So in this case, this is Coinbase. If you are old enough to remember, back in April of 2021, this thing went public at $378. Now that was a hefty price, and pretty soon it collapsed to $41. Now notice these indicators, the way they behaved. Notice how far apart they were, even in October of 2022. They were apart $200, or 218%. And then notice that the indicators started getting closer together. So in my mind, when this happens, it means that there is less risk. The risk we need to buy somewhere, but we also need to put a stop somewhere. And I usually put my stop at the yellow line. So once the security breaks out above the blue line, I put my stop somewhere. So as notice that this latest alert that happened on 11th of July right there, I sent alert out around $85 with a stop at 45. Yeah, it's a pretty wide stop. However, let's say it broke out, let's say the same security broke out above the blue line on November November 2022. So in that case, I would need to put my stop also at the yellow line, and that would have been 61% stop. You see how, much less risk. So yes, this is a volatile security, and you can't I wouldn't overweight basically. So let's say you have a $100,000 account, maybe buy 1-2% of that account for the security, because if your losses, if your stop is like 50%, then you need to account for the loss, potential loss. In this case, thankfully, it didn't happen, and alert was sent right there on the 11th of July at around $88. A couple of days later, we got this SEC ruling against SEC, and notice this big pop higher. Right now, subscribers are up as much as 31% already. So notice here what it says target achieved. I would consider taking profits and move my stop to entry. So this is what I usually do: is I buy around the blue line. Once my target is reached, target is 2 average true ranges. So notice this ATR, average true range, is a free indicator. There it is, average true range, and it simply shows about how much does a security move on average. So my target is 2 average true ranges from entry, and once the target is reached, it's not the where I want to sell my entire security. I want to, at this point, just move my stop to entry. So at this point, you need to move your stop to entry, possibly take some profit. So that if tomorrow on Monday the stock collapses, at least you'll have a small profit. So this is basically the way we do breakout trades. In this case, this is obviously a breakout trade because this security has hit all-time low. This is an all-time low back in January of this year. And then once again, it started moving higher, and we have now a breakout, and the target has been achieved. So again, move your stop to entry. How high can it go? At this point, I don't know, because there's no way to know the target. I mean, it used to be $300, so it's not unreasonable to think it might go to 300. Yes, it could go that high. As of right this instant, at least we have a profit, and possibly, and at least we have no loss additionally. So small profit, no loss. Can it go higher? Absolutely. So let's wait and see what happens. In the meantime, thank you for staying and listening to this video until now. Don't forget to like, share, and comment on share this video and comment on this video. If you have any questions, let me know. And then also head over to my site, MasterChartsTrading.com. You can get my indicators, these indicators that you see on this chart, the green, blue, red, and yellow lines. You can also get my newsletter that I send out on daily basis, and also I send out a weekly members only video, which will cover this week. It will cover quite a bit of different stocks. So for example, ETFs, foreign ETFs, large cap stocks, some of the speculative stocks. For example, this week we'll talk about Asana, Car Gurus, Real, Stratasys, Snowflake, etc. And as well as gold miners. I also cover a lot of gold miners. I trade gold and gold miners as well. So head over to MasterChartsTrading.com, sign up. I will also have a yearly sign up pretty soon, but right now I think the best deal is to get both indicators and newsletters at $59.95 per month. That's a good deal. Let me know if you have any questions. Thank you for watching, and have another great trading week. Bye-bye.